All right, you're looking at a comparison chart of the Dow Jones Industrial Average, Nasdaq, the Russell 2000, and the S&P 500 since July 7th. Now, the Dow has been up every day during that time. I think 11 straight sessions, something like that. But it's up less than 5%. And the Dow is a price-weighted index with only 30 stocks in it. So a stock like United Health at $500 or Goldman Sachs at 360 is going to have more weight than a lower price stock. But anyway, I don't want to get into the Dow. It's only 30 stocks. It's just pointing out that during the time that the Dow has made, such a big run, the Russell, the smaller cap index, is up, more. And nobody talks about the Russell. It's up 5.42%. The Nasdaq, respectable, nearly 3%, and S&P 3.5%. The Nasdaq had a big run in the first half, and now there's some rotation into other stocks. We talked about the airlines and the materials and the steel and the home builders and the banking and oil. And so the high tech stocks are taking a break, and that's fine. The rotation is good. I just wanted to point out that all of the indexes are doing well. There might be a lot of attention paid to the Dow because the number of days up in a row, but on a percentage basis, it's just kind of going along with the rest of them. Anyway, that's my rant for today. And there's your Dow. Yeah, I think it's up 11 days in a row. But I don't really care about the Dow. So there. So we're going to move on. Maybe you want to take a look at the Russell, since I'm being a wise guy. This thing's had a nice move off of its bottom. These are small cap stocks, like I mentioned, like every time. It's got 17% exposure to those small regional banks, which I'm going to get to a little bit today. And then the Nasdaq I want to take a look at because it has pulled back, taken a little bit of a break as there's rotation into other sectors, which is healthy. The last time it pulled back, I just want to say, the last time it pulled back to its 21 and found support. So it's 1.2% above the 21. If it does that again, I mean, great. If not, if it goes higher, great too. It's just that it's pulled back from that trend line, which it was bumping up against. So it's back into the channel now and getting closer to the rising. You got to know that it's a rising 21. So this thing's going up, on a daily basis, the 21 EMA. So yeah, it's going up as the index. So if the index goes sideways, it's getting closer and closer to the moving average. And perhaps that's the way it meets the 21. It just kind of goes sideways and the 21 rises. But anyway, the point is the NASDAQ is taking a break. There's other sectors that are leading, and I'm going to get to those in a minute because I'm going to start with Chevron, the oil stocks. Now, we've talked about a boom in housing and in transportation, airlines and trucking, and steel was making some noise today, the banks, and now we got the oil stocks are doing a little better. They reported earnings today, and Chevron and Exxon are the big kahunas in the oil and gas space. They make up more than 40% of the XLE, and this has got over a 300 billion market cap. And they were supposed to, they will report earnings on Friday, but they pre-announced some strong numbers today, and the stock was up nearly 2%. Since I mentioned XOM, this one, went up, in concert with the numbers from Chevron, and they're going to report as well on a Friday morning. So we'll learn more about Exxon and Chevron later on in the week. I did want to point out that it's just when you get a number like that from a big stock, then it drives the whole sector higher. This is a Warren Buffett's favorite company, seemingly Occidental. This is an exploration stock, oil and gas exploration. This is an international company, and it traded up to its 200 simple moving average and got rejected a little bit there today. We'll see what happens as the week goes on. But you could see that it closed 1.3% below that black line there. So nothing wrong with that stock. Devon's another one. This is a U.S. exploration stock, and you can see they've looked like they've hit bottom. There's a bottom, 44, a retest at 45, another retest, and now they're starting to tick higher. So, I mean, if you're the type that likes to buy, bottoms, or you could say there's a buy point there at 51.41, but below the 200 makes me nervous. Anyway, that's it. Oil and gas stocks were strong, and it wasn't just the integrated and the exploration, the field services, they're showing strength. I think Tidewater was down today, but that's been really strong and making new highs. Yeah, it just pulled back to its 10 EMA. And Weatherford and equipment, oil and gas equipment stock. This one made a new high today, up 2.5%. So the oil and gas stocks, you can't take your eyes off them. They're doing well. Just got to acknowledge it. I'm not buying any of these stocks just yet, but I'm just acknowledging their strength. I did mention Goldman Sachs and the banking stocks, and they're really showing strength as well. They've already reported earnings, and they reported strong earnings, and you can see the stocks responding here with the heavy volume coming in on Goldman Sachs, JP Morgan as well. These are their Dow components that are showing a lot of strength. This one made a new high today. And this is the one I like of all the banks. You can see the growth profile, the accelerating sales growth, 18, 25, 34%. And then the earnings growth, 17, 37, 58. That's strong growth. So JP Morgan, definitely a formidable stock right now. Bank of America, if you're going to talk banks, you got to talk Bank of America, right? I just wanted to point this out that now it's above its 200 simple moving average, which is, for me, I feel a little better when they're above the 200, but there's a little buy point there. There's a lot of volume coming in, big blue bars on Bank of America. So congrats to the longs there. Since I'm at it, Wells Fargo, the bank everybody likes to hate, is actually setting up in a nice little base here. And they also had good earnings. You can see the accelerating sales growth. -4%, 17%, 20%. That's what you want to see. Stocks don't go up because of the chart. They need sales and earnings growth. I did mention the home builders, and I just want to go through these quickly because I go through them every day, and they're just in a trend. They're trending higher, finding support at their moving averages. And this is DR Horton. You can see this big bearish engulfing bar was their earnings, the reactions to earnings, and all it really did was come down to the 21, had an inside day, and then popped higher today, nearly 2%. So I don't think there's anything wrong with DR Horton. KBH, another one. This is kind of the I shouldn't say lower end builder, but they're less expensive homes that they build. And this one, again, just pull back to the 21 last week and showing strength. You got to expect profit taking when stocks move this much. I mean, Pulte moved out of the base and just ramped higher, and again back to the 21 last week, had an inside day and was up 0.5% today. So the home builders look good to me. Now the steel stocks went up on a Korean earnings report from a Korean company, POSCO. This one really ramped higher, nearly 12% on massive volume. So that kind of move is not to be ignored. And it's up after hours, but it reverberated throughout the steel stocks here. This is called pen action, and you could see Nucor up, bouncing off of its 21, up nearly 2%. So that stock had a good day. US Steel X, not Twitter X, US Steel X, up more than 2% today with a stronger volume. So definitely the steel stocks are making some noise here. Something to pay attention to. This is Timken. It was up 0.5%. TX, Terranium, it was up 2.2%. And Cleveland Cliffs reported tonight, and you got to really wait till after their CEO gets through talking. He's a really colorful fella. It was up 3.25% today, and down slightly after hours. I've got to get to the report. And later on, I've just been really busy. Some of the retail stocks, it's hit and miss in retail. ELF still sliding after the oddity IPO. Now it's sliced, it's 21. The earnings are coming up. We know this thing gaps on earnings. It's a serial gapper. There's an earnings report here in May, and then one back in February. There's your gaps every time, right? February it gapped, what, 15%? Yeah, that's a nice move. And then in May it gapped 20%. So, I wouldn't count ELF out. I know people are getting frustrated with it, but that's kind of the way it moves. It gaps on earnings. You can see back here, this big move here was a 15% move back last November. So just got to be patient when you own something like that and recognize what you own and how it moves. I wanted to mention Celsius. This stock If you followed me at all, then you know that the first pullback to the 50 after breaking out of a base in an uptrending market is usually, there's a high probability that this will be successful. Whether this will or not, I mean, we'll find out later on this week or maybe next week, but I like my chances here with Celsius. It pulled back to its 50 today at 141. Yeah, so I'd expect a bounce here in the next few days. We'll see. I don't know if there's a catalyst out there or not. They don't report earnings till August 10th, so we're just gonna have to wait and see if it bounces. The probability, I think the odds are good for Celsius longs. Mattel, I had to point this out because I went to the movies this weekend and I could not believe how many people were dressed up in pink going to see Barbie, and it was showing on like 18 showings a day, and people had their blonde wigs and their pink scarves and pink shirts and pink Crocs. Yes, I saw many pink Crocs, and I'm not going to mention Crocs during this retail section this time, not until they report earnings this week. But so I didn't mention Crocs today. But anyway, Mattel pulled back to its 10 and got a little boost from Barbie today. That's the Barbie boost. And the movie was what 155 million in box office receipts this weekend. So, and that's partially why AMC was up as well. The people are going back to the movies. There was Oppenheimer and Sound of Freedom and Indiana Jones and just a lot of different movies for people to watch. Anyway, that's it for me today, except for I lied one more thing in honor of the great Steve Jobs. I have to mention this IPO here, which is really impressing me. I mean, it undercut its IPO low day, which is normal, and then formed this quick little base here, and now it's ramped out of this base, has that buy point there around 48, and today traded over 53. This is definitely showing a lot of strength and really impressive. It's getting decent volume. I have not eaten at one of these places. They're in 22 states, but I guess they're pretty good, and the stock's doing great. So that's all you can say. I mean, I expected this IPO to really flop because restaurant business is really tough, but this one's doing well. And so we're just going to keep monitoring these IPOs. I've got 4 or 5 IPO stocks that I want to get to, but that's it for today. Oh, I lied. I was going to do the small banks. These small little banks are making big noise. It doesn't look like much on a chart, but that's a 9% move today for PacWest Bank Corp. So these things are really strong. I'm sorry, I forgot this with the, I got so enthralled with the large banks. This one is up 4% here. Looks like a little move, and it's up 4% with 1110 buy point there. Key Corp is not a small bank. It's like $11 billion market cap. And look at the average daily volume is 20 million. FITB, which is a Fifth Third Bancorp, another one. It looks like it's bottomed here. Had an inside day today, up 1.5%. Once again, a lot of volume, nearly a 20 billion market cap. And HBAN is the last one I wanted to show you. So there you go. I showed you these smaller banks, and they're not that small though. This is 17 billion, and then it gets a lot of volume, daily volume, but they've definitely washed out on the Silicon Valley news, bottomed, and now we're making a stage 1 base. So it's just something that I'm watching. Anyway, that is truly it for today, and we never give up.